The conventional strategy for anybody who invests in crypto is to buy low and sell high. But in this video, I'm going to be talking about the complete opposite strategy, and that is trying to profit from the fall of a price of a crypto. Now, why would you ever even want to use this type of strategy? In my opinion, and this is not financial advice whatsoever, there is a time and a place when using this strategy can bank you some decent profits. It's so much easier in crypto rather than stocks to spot something that is completely driven by momentum rather than fundamentals. For example, whenever there is some new catalyst for one of the layer 1 blockchains, you consistently see the whole buy the rumor, sell the news event play out time and time again. The price increases in the weeks leading up to the event, and soon as the event has happened and the momentum starts to fade away, so does the price. Some recent examples that come to mind are Cardano. Back in September, we were expecting the release of smart contracts, and in the month leading up to this event, the price skyrocketed up to about $3. And once the event happened and people realized there was not going to be a whole lot of activity going on still for a couple of months, the price started to drop away. And the price has fallen all the way down from $3 down to $1. A mini example of this happened on Polkadot also in December. There was a small rally in the price in the lead up to the Parachain launch event, but soon after the event the price too fell away. Solana and Terra Luna saw over 10,000% gains in 2021. Now, it was clear that they were trading on a whole lot of momentum and they were eventually going to see a correction, but they did fall away. At the same time, the whole market decided to take a downturn. I wouldn't be surprised if we see something similar play out for ETH 2.0, which is going to launch at some point this year. Whenever we get a bit closer to the date, I'm sure we're going to see a serious pump in the price of Ethereum. But you can probably also be guaranteed that once this event happens, there is probably going to be a drop off in the price for a period of time again. It's not easy to take a bet against the momentum of the market. It takes a big pair of balls, some timing, and a bit of luck. There are many ways that you can chart cryptocurrencies, including the likes of using options or futures, but these would be much riskier ways of going about it because you would be adding leverage into the equation, and this would magnify your profits but also magnify any losses that you make. Now I am going to go through short selling on Etoro, which is a very easy way to execute this strategy. I have logged into my Etoro account and we're going to use XRP as our example for executing a short trade. When you are trading on Etoro, you will have 3 different options of trade. So you have a buy, you have your sell, and you have your close trade. That is one important thing to be able to distinguish between a sell and a close trade. So let's say I had a holding of XRP and I wanted to sell what I had. In that situation, I would just go to my portfolio, right click on it, and close trade. But a sell trade is completely different to actually closing your position. A sell trade is the short sale we are looking for here. Let's briefly talk about the fees that you're going to pay for executing a short trade on Etoro as well. So the first fee that you are going to pay is the spread. So the spread basically is the difference between the price that you can buy and sell XRP on Etoro. When you buy XRP on Etoro, they are going to charge you a price that is a little bit above the market value. And when you sell XRP, they will sell it to you at a price that is a little bit below the market value. They essentially keep this difference, and this is how Etoro makes most of its money. So let's have a look at XRP here. For example, I can sell XRP at 0.0647 and buy it at 0.6205. The difference between these two prices is the spread, and it will actually vary from asset to asset. There is a different spread depending on what you are trading. For XRP, the spread is 2.45%, but it is different for other ones like Bitcoin. It is 0.75%, Cardano it is 2.9%, Ethereum is 1.9%. So what this means is if I open up a $1,000 short position on XRP, it is going to cost me about $24.50 by the time I actually open and close the position. So it is quite expensive when the spreads are pretty big. The second fees that you are going to have to face here on Etoro are overnight fees. Basically, when you are short selling on Etoro, it is like a CFD, and CFDs are charged this overnight fee every day that you have your position open. So if I was opening a $1,000 position on XRP, my daily overnight fee would be 41 cent USD, as you can see it here at the very bottom. So the longer you have your short position open, the more costly it is going to get because of these overnight fees. If you have your position open for a month before it actually becomes profitable, then you are going to face another $13 or so of overnight fees. When you are executing a short sale on Etoro, you're going to have to put up the full amount of capital. So if I was trying to short sell $50 worth of XRP here, I would actually have to put up that $50. Theoretically, there is no limit to the downside of a short sale because the price of XRP could go up to something crazy like $20. Whereas if you are investing in a long position just buying some XRP, the most you can lose is the amount that you invested. But you can limit your downside on your short sales by putting in stop losses. Also, there is a negative balance protection on Etoro. If your position did go into a situation where all of your capital was wiped out, they would just close the position. So I'm just going to open my trade now for $50 here on XRP. I'm probably going to close it again straight away because the market is in such a bad place. It is not the time to be short selling. There is a time and a place, I think, for short selling, and now is probably not the time. And just like that, when I open my position, I am already down 2.6% because of the spread. To close your position then, it is quite easy. You just come back into your portfolio and click on the X button here to close the trade. So you don't go to Discover and go to XRP and buy the equivalent amount. You go into your portfolio, select it and close trade. So that is essentially how you open a short position on Etoro. It is risky, as I said, because there is potentially unlimited losses, but this is within reason because Etoro will close your position if you do lose 100% of your collateral. And there is a time and a place for executing a short on a crypto. It would want to be something that you have pretty high conviction on. So that's pretty much it for my video today. I would be interested to know, has anybody traded a bit of crypto like that before, moving from more of a long-term perspective to day trading it to try and make some money? Please let me know your strategies in the comment section. I hope you enjoyed the video. If you did, please make sure to drop a like on it and subscribe to the channel.